So let us continue. Types of trends in a market. In a financial market, trends represent the general direction in which prices are moving. Understanding trend is crucial for traders to make informed decisions, and there are just three main types of trends in the market. So don't get confused. There are just three, which are number one, we have the uptrend, or sometimes it is called bullish trend. An uptrend is characterized by a series of higher highs and higher lows. This indicates that prices are generally moving upward over time. So in this kind of market, you only look for buy opportunities only. So whenever the market is going up and then you see it drops a little bit down, you take your buy trade to the upside just to ride with the trend. Like we said the other time, that it's make a series of higher highs and higher lows. So right here, this is a low right here, and then this is another high. So immediately that actually formed, we notice that the market just went up, came down a little bit, went up again, came down a little bit. This place is higher high, and this place is higher low. So like you see it right here, this place is identified as higher low, and this place is higher high, higher low, and here will be higher high, higher low, then higher high to the upside. So sometimes this is not how you're going to see the markets move. Sometimes it moves in direction that you yourself, you might not even, it might move up like this, come down a bit, go up, come down, go up, come down, go up, come down, go up like this. So in this kind of trend, we're going to be talking about it in subsequent video, where we're going to be analyzing the chart using the market structure, and then we're going to explain everything that you need to understand by you riding the trend. So let us move on. Then we also have the downtrend, which also means the bearish trend. A downtrend consists of series of lower highs and lower lows, indicating that prices are generally moving down over time. Then in this kind of trend, all what you'll be looking for is just the sell opportunities alone. You don't need to take any buy at all. Just be looking for sell opportunities alone. Not that you cannot take a buy during those trends, but you are at high risk whenever you're taking a buy trade on a downtrend market. So just be very, very careful. Whenever you see a short downtrend, don't take a long, and whenever you see a long uptrend, don't take a short trade from there. So how do you identify this trend? As you can see, the market is just moving down. As you can see, the market is just moving down, and then this is the high. This place is identified as the high. Then this place is the low. Then this place will be the lower high, and this place will be lower low, lower high, lower low, lower high, lower low. This place might not be identified as the lower low because it hasn't broken this low yet, but let us just see it as the lower low, and then this place will be the lower high, and this place will be lower low. Basically, you notice that the market is just making series of lower lows and lower highs. So like that, you already know that this market is actually moving down. And then we have the sideways trend, which is usually called the horizontal or the ranging bound market. In a sideways trend, price move within a horizontal range, showing no clear long-term direction. That is, the market is neither going up nor going down. So that shows that the market is just consolidating on flat mode. So the market is basically moving on an horizontal range, probably from one particular high to a particular low, not actually clarifying if it is going to the uptrend or coming to the downtrend. So if you want to take the trade, you need to take the trade within the range. Probably you are going to be buying the low and then you'll be selling the high. So whenever it reaches resistance, which is your top, you sell, and when it reaches your support, which is down, you take your buy trade from that particular region so that you can actually make profit from that movements. You should not trade consolidation except you have back tested it and you think that you are good to go. But as a beginner, whenever you don't see a clear trend, don't take any trade from that particular chart. This is how the consolidating market actually looks like, or the sideways trend. So as you can see, this is a low right here, and then this is high right here. When the market went up, it went to a particular high, all you need to do is to take your sell trade from this region and then take your profit around this region. And then also you can take your buy trade from this region to right down to this point and take your sell trade from this region to the downside. But in this kind of situation, you never know when the market is going to break. So that is why most people are usually advised not to take trade whenever the market is actually consolidating. So be very, very careful. Whenever you are in a consolidating market, try as much as possible to take probably partial profit or break even, and then leave the market to start trending and then take your trade with the trend. So let's go to the technical trading tools. In forex trading, technical tools are essential for analyzing price movements and making informed decisions. The trend line can be used to identify the trend. Then we have the Fibonacci retracement, the support and resistance level. Talking about trend line is a straight line on a chart that contains specific price points to highlight trend. It is used to identify the direction of the market, probably the uptrend or the downtrend. So like we actually said right here, this is a trend line right here. This is a trend line right here. I'm still going to create a video that is going to talk about trend line, how you can actually trade trend line profitably. So as you can see, this is a trend right here from this point. Let me erase all these things. So this is a trend line from this point drawn like this, and sometimes you can actually draw another trend line which is usually called a counter trend line like this, just to know when to enter your trade. If you want to know about trend line, click on the link around this video. You're going to see a trend line strategy right there, how you can draw a trend line perfectly to start trading with. I'm going to leave the link in the description also. So that is it about trend line. Let us continue. And then we're talking about Fibonacci retracement. It is an horizontal line that indicates potential support and resistance level at key Fibonacci level, which are the 0 level, 23.6 level, 38.2 level, 50 level, 61.8 level, and the 100% level. It is basically used to identify potential reversal levels based on the Fibonacci sequence. So people believe that 61.8 level is the golden zone where you can take most of your trade from to have maximum profit. So I'm going to create a video on Fibonacci, how you can trade Fibonacci profitably. So probably you should just check the link in the description, or you should check the card. In case it is not there, it will still be uploaded. Talking about support and resistance level, it is an horizontal zone drawn on a chart at price level where the price has historically had difficulty moving above, which is the resistance, or moving below, which is the, like we actually said before, moving average can also be used to identify support and resistance in the chart. So we're just briefing it out so that you can actually know this is just a beginner aspect. And also, if you want to join my 30 days free training where I'll be teaching you from A to Z on how to trade profitably, all you need to do is to join my Telegram channel and also check the pinned content so that you can see how you can actually join the 30 days free mentorship. That will be all on technical trading tools and also on types of trend that we have in the market. We actually covered 2 topics here. So in the next video, we're going to be talking about charts pattern and how it can be helpful for you to trade profitably.